how does the Russia-Ukraine conflict affect your investments? There is a big real estate problem here. Does it have the capacity, though, to crash your real estate investments? Yes, Ukraine has replaced COVID and NFTs as a subject that people love to talk about, but don't fully understand. Siri, define sanctions. Well, this is GRE. This is not the NBC Evening News with Lester Holt. So let's talk about how this affects you and your investments. The short answer is most likely this will result in a greater likelihood of higher inflation and higher interest rates. Gold is a traditional inflation hedge that immediately spiked up to about a 9-month high upon news of the conflict, and crypto and stocks and treasuries have all seesawed quite a bit since then. Before I discuss the real estate, understand that both Russia and Ukraine are quite commodities rich, so this could stifle their imports of things like metals and a bunch of commodities and oil and coal and fertilizer that they export to the world. If you have the same amount of dollars chasing fewer of those goods and services, that is indeed the recipe for more inflation. So yes, U.S. inflation could get worse. The CPI came in at 7.5%. We're going to have our next reading on that in just a few days here. But yeah, this conflict won't affect the next reading of the CPI. But what it could affect is the upcoming meeting later this month when the Fed gets together to make the decision to hike interest rates to get on top of inflation. It could affect that. So this war sets the table for really a conflict of a different kind as well, and that being a financial one. The Fed has increasing pressure on them to raise interest rates in order to stifle inflation and cool off this heated up economy. But see, their stock-owning cronies don't want them to do that because oftentimes in the recent past, when the Fed raises interest rates, it makes stock prices crater. So let's take a look at this Fed funds rate chart. Understand that the Fed has not raised interest rates since 2018. Also note that the shaded portion of this chart, those denote recessions. And notice how during recessions, we typically have the line going down. Yeah, we often have lowering of interest rates occurring during a recession, including the housing crash that took place 15 years ago. And a lot of times it's counterintuitive to people. People think when there are lower mortgage interest rates that makes home prices go up. Oh no, just the opposite is true. Raising rates confirms that the economy is strong and people feel secure in their jobs. Raising up rates actually correlates with higher home prices, not lower ones like I've talked about extensively elsewhere. Of course, it's really important to note that this federal funds rate doesn't directly affect mortgage rates, but it does indirectly. So just watch. Pretty soon the Fed and special interest groups are going to be bickering about the level of interest rates, just like the old couple that can't agree on the house's temperature. So higher inflation is a boon for you if you're a real estate investor and you have a mortgage on those properties, or even if you have a mortgage on your own home, that is a boon for you. But if you're a real estate investor with mortgages, of course, you benefit from the inflation triple crown of asset inflation, debt debasement, and cash flow enhancement. You're really making out. But the specter of higher interest rates is not as friendly. That could cool the appreciation rate, although housing is expected to continue to appreciate. We have a strong economy with a low housing supply. So, as I've touched on so often, higher mortgage interest rates, if those are coming, and they've already begun to come, that is a really poor predictor of housing prices. You need to look at more conventional measures of economic health, like what the unemployment rate is. It's really low now. It's at 4 or less. And what's happening with GDP growth. And yes, I know the economy isn't completely robust. I mean, if you look at things like where there are supply shortages of lumber, if you can't even get lumber off the shelf when you want it, it's really difficult to call that a good economy. But it's those conventional measures like unemployment and GDP, those correlate more closely with the future direction of housing prices. And what else does? Supply of housing, which of course is really low. And of course, I'm going to be tracking how all these events unfold, especially as inflation might continue to heat up. There's no indication that it's peaked yet. I'm going to do that both here and on the Get Rich Education audio podcast. That show is completely different from the material here, so be sure to check out our audio podcast. And if you don't know about podcasts, an easy way to get a hold of it is just to download the Get Rich Education phone app and listen that way. That way you can listen on the go. But look, here's the big problem. If inflation continues to be elevated, and employee wages don't keep up proportionally to that greater amount of inflation, and oftentimes they haven't been, what's that do to your tenant? You need that tenant rent income in order to have cash flow. Your tenant has to be able to afford that higher rent if you're moving up your rents with inflation, and hopefully you can. Well, here's the thing that a lot of people don't think about. A tenant doesn't only have wages. Often a tenant has assets like stocks on the Robinhood app that have ballooned in value over the last few years, or cryptocurrency. Bitcoin has 4x'd in just the last 18 months. So that's another way that tenants are paying the rent, even if their wages don't keep up proportionally. A lot of people don't think about that. There's more than just the wages. But now maybe you're asking another question, and I guess this is really pessimistic, but let's go ahead and follow this through because it's still a germane question. What if the value of those assets, like stocks and cryptocurrency, crashes and your tenant's wages also don't keep up proportionally with inflation? Here's the thing. As you know, here at GRE, we typically avoid investing in really high-end luxury property. You don't get a very high ratio of rent income to purchase price anyway. We provide housing that's clean, safe, affordable, and functional. That's our fourfold mission with the housing we provide. And oftentimes you want to buy something not at the median housing value for rental housing, but just a little bit below the median. That's typically the sweet spot. That's typically where the better cash flow is. And oftentimes what happens if your tenant needs to move out and you're wondering, oh, okay, well, where is that vacancy going to get filled? How is that going to happen? They come down from above and they might have to step down a level in housing class. And this all has to do with how you position yourself in the marketplace. Again, we generally buy those properties that are just below the median for an area. That's just one reason why. That's where your new tenant comes from, one that was living somewhat more affluently previous to that. And in a market where we have this astounding dearth of housing supply, oftentimes your tenant cannot move out because they don't have a replacement place to go to. They will end up staying there if they can afford it. So that's what's going on in the real estate market amidst this Ukraine conflict, continued low supply, and high inflation, with this Ukraine conflict introducing the specter of even higher inflation. And you know what's interesting is amidst all of these asset value gyrations after the conflict in Ukraine, you know, people are looking and checking if stocks are down 2% today or up 3% the next day or whatever. You know, the question no one really even thinks about asking is, what happened to the value of my real estate today or even this week? They don't even ask that question. So it's really a testament to the stability of the asset class. And maybe just as importantly, when there's conflict in a place like Ukraine, as unfortunate as that is, no one even thinks about asking is, oh, well, I hope my tenant in America here can still pay the rent this month. Well, it's just assumed they're going to have the capacity to continue to do that. It's just a testament to the stability of real estate among all the major asset classes, perhaps the most stable one. Hey, we'll go ahead and give this a like. Give this video a thumbs up for your approval if you like this perspective, if it gave you some new thoughts about how the conflict affects you and your investments every day. And, you know, let's really count our blessings and be fortunate. Chances are you probably have sufficient heat in your home, and you probably have enough clean drinking water, and you probably don't have to worry about hearing bombs in the middle of the night tonight. So our thoughts and prayers are truly with those in Ukraine.